Let's shift focus on to the markets now. And local trade remains under pressure in intraday trade. On the commodities front, gold has hit a 4-week high, while metal prices extended their winning streak to the 5th session. Thabiso Mamathuba is an investment analyst at FNB. He joins us to talk through the latest market moves. A very good afternoon to you, Thabiso. It's a cloudy day outside today, and it would seem that is reflected on the markets. How are we faring at midday trade?
Good afternoon. Yeah, actually the JSE is trading mostly in the red this afternoon, but this is in line with, a weaker trading session that we saw earlier in Asia this morning. We're also seeing a retreat in European markets this afternoon. So this general sell-off in the markets is basically a result of global risk of sentiment. This comes as geopolitical tensions rise over U.S. House Speaker Nancy Pelosi's potential visit to Taiwan. So as a result of this elevated geopolitical tensions, we're seeing market participants flocking to safe haven assets. This obviously puts emerging market currencies as well as equities under pressure. We're seeing the JSE All-Share Index down just shy of 1%. This is amid broad-based losses with resources leading the declines. We're seeing both heavyweight Naspers and Prosus declining in this is obviously in line with Chinese tech stocks. But then so far the rand has remained pretty steady against major currencies, although a weaker US dollar is also supportive. But obviously gains are limited as, the markets remain focused on the likely impact of US House Speaker's visit to Taiwan.
Yeah, in fact, we're going to be having a conversation on that in a few moments to help us understand just what that potential visit could be. As we understand it so far, it's not yet confirmed. But let's come back home and take a look at Massmart. They have published their trading statement. How did they fare?
Yeah, so the share price so far is down 4.3%. So this has been quite a bit of a disappointment. This obviously comes as the market digests this latest trading update issued this morning by Massmart. The company's headline loss actually widened further to 409 cents from last year's losses of 166 cents per share. And on a like-for-like basis, however, we're seeing sales sort of recovering compared to the same period last year. However, merchandise sales remain weaker, and this was a drag on overall top line growth. The company's results were also impacted by the once-off cost of about 184 million rand, which the company said that they paid this amount in order to exit the lease agreement for the River Horse Distribution Center in KZN, which was destroyed in the July civil unrest. So while the food and alcohol categories sort of performed well on the back of, we've seen a bit of a recovery in consumer mobility as well as the easing of liquor restrictions. However, the shift in consumer spending towards non-discretionary items will definitely continue to weigh on general merchandise sales for this counter.
MTN Ghana, they've also released their trading statement for the 6 months ending the 30th of June this year. How did they perform?
Yeah, so MTN Ghana's results were positive with service revenue growth of about 29%. This was driven by growth in voice as well as data revenue. We're seeing data revenue was up 49% in the first half. This was supported by about a 15% increase in active data subscribers. And then voice revenue recorded growth of about 21%. Also, this was due to a higher subscriber base. But then, growth momentum in the mobile money division did actually slow down a bit, and this was a result of that e-levy that was imposed on customers. So this obviously resulted in lower transactional fees. So the company reported margin expansion, which was quite positive, particularly considering the high inflation environment as well as disruptions to global supply chains. But overall, this result actually bodes quite well for MTN Group, which we know issued a positive trading statement yesterday for the first half.
Right. Happy shareholders all round, and much of the same for BP. They came out with a 14-year high profit.
Yeah, so the company reported, the best quarterly profits in 14 years at 6.9 billion pounds. And obviously, we know that high energy prices assisted the company in achieving these levels of profit. The company's revenue increased 86%, which was ahead of market expectations. However, this result was broadly in line with industry peers in the energy sector. The group obviously capitalized on soaring commodity prices, and also they expect oil prices to remain elevated given this protracted geopolitical disruptions between Russia and Ukraine. In terms of financials, the group's balance sheet remains quite solid, and this should continue to support share buyback activities. And the exceptional trading gains in oil and gas, as well as improved refining margins, should continue to boost momentum for the full year. And obviously this is despite that introduction of a new oil and gas levy by the UK government, which could see the company reporting a deferred tax charge of about $800 million US dollars. But overall, it was a very good result.
Yeah, it's not all bad news, hey? So thank you very much, Thabiso Mamathuba. She's an investment analyst at FNB. And as she mentioned, that potential visit by the U.S. House Speaker Nancy Pelosi to Taiwan.